Just give a second here before we get started. Let some people sign in. We're going live. We're simulcasting on YouTube, Facebook, and through Periscope directly on Twitter right now. So I wanted to give my detailed overview of the Senate bill that was passed last night. I had one of our legislative officials send me a copy along with a half dozen other people yesterday. And I have spent the better half of a couple of hours reading through this actual bill with a highlighter. And I wanted to give you my thoughts. The reason why I'm doing this is because so many business owners at this point have questions. There's a lot of concern. There's a lot of, candidly, there's a little bit of fear out there on what's transpiring in our country at this point. And many people are looking to our government to help ease the solution. Again, I don't think we entrepreneurs in the United States look to our government as the solution. I think that is the unanimous consent that they are not our solution. But when desperate times come about, we look for help. And it appears that based on what has happened with the passage in the Senate, that we could possibly see some reprieve. I know there's going to be some legislative adjustments that are happening in the House today, and there will be some debate, and there is candidly a debate at this time. So hopefully that we'll have this bill passed, and some of the things that I'm noticing will be in our abilities here very soon. So I want to dive deep into this particular legislation and show you what I'm seeing. So for those of you who don't know me, I'm Justin Goodbread. I am a certified financial planner. I am a certified value growth advisor and a certified exit planning advisor. This is my take. I am not an attorney. Let me go ahead and say that. I am not a tax advisor. Let me say that as well. This is just my candid take on what is happening with this legislation. I consider myself to be somewhat a well-read individual, and I've spent a lot of time reading through this, asking questions, talking with attorneys and CPAs and other professionals in the industry, from M&A advisors or mergers and acquisition advisors to SBA experts, to try to help gain some insight onto these particular events that are in the bill. This is not advice. Let me say that again. This is not advice. This is not a recommendation. This is education only. I want to give you enough information so that you can seek help from those of us who know how to deal with these things on a case-by-case basis. Again, this is not advice nor recommendation. So without further ado, let's jump into the bill. As I'm seeing it right now, there's a couple of key points that we have to look at in this particular bill. The first is there's a paycheck protection. It's getting a lot of press at this point. This bill also offers some extensive debt relief for us business owners. And most importantly, a lot of questions have been asked about when will this be effective. Inside the bill, it actually states that no later than 15 days after it is signed into law, the Small Business Administration will be required to enact these particular programs that we're going to talk about today. So those are the three big nuggets, but there's also a lot of other caveats to this bill that I want to go through in detail today to help us understand what we're looking at. SBA 7A is a program, and it's the primary program that the Small Business Administration uses for financial assistance to small businesses. Now, small businesses is often categorized as those who have employees less than 500 in size, and there's also a revenue component, but the majority of the people that I speak with are falling that small business category. So I want to first deal with Loan 7A. And candidly, this particular point of the legislation covers about the first 30 to 50 pages. If you read nothing else, you may want to look at this particular section of the bill. Now, I've broken it down into sections as it's written in the bill. Again, I went through it with a highlighter line by line, reading these individual things, and some things that I thought were notable, I'm bringing out. Again, this is not detailed to the point that you can make decisions based on the slide, but rather you can formulate the questions that you need to do as a business owner to help you speak with your professional advisors. Again, if you don't have a professional advisor who can help you through this, this is what we do day in, day out. Our job is to try to help our clients double their net worth every 3 to 5 years. And we work with a litany of people to help them do that. So let's dive right in. Section D clearly denotes something interesting. It actually makes note that sole proprietors and independent contractors are eligible for this particular adjustment on the loan 7A. Oftentimes that's not the case. Many times you have to have employees. Marco Rubio, our Senator Marco Rubio, said there's 30 million small businesses in the United States. And the only way that I can come up that he comes to that particular number is including both those employer firms like myself who have employees that we are responsible for paying, and those who are non-employer firms or the sole proprietors and independent contractors, as you see on the screen. It's the only way you can come up with that number. If you were to separate the employer firms from the independent contractors and sole proprietors, you're only dealing with about 5.3 million or so, depending on which census report you want to read, on those who have employer firms. So it's interesting to me. The very first thing that I would note is that this is available for those artisan style contractors or independent contractors or freelance contractors, but you have to have a 1099. You have to show that you had income involved in this particular, to receive this particular portion. Section E also deals with an increasing amount of the loan. So they moved the loan amount from 5 million to 10 million. Now, for the majority of small business owners out there, that's inconsequential, but you can see they pushed a lot more lending capacity, and they're calculating the loan. And this is actually language from the bill. And it's going to be interesting to see how the banks and the SBA and the qualified lenders interpret this. But it says the average total monthly payments by the applicant for payroll costs, including incurred during the 1 year prior. And there's actually some dates inside there. So basically you can look at about mid-February, February 16th, 17th, or 18th, and kind of go backwards a year. And that's what their SBA is going to be using to help quantify the lending amount that we business owners could apply for. Section F is rich. And so there's a lot of little subpoints in Section F, but perhaps one of the most amazing things in Section F is the paycheck protection. And I had to pull several different sections together to kind of piece this together. Section F outlines the main point of it, and then you have to look through the bill to kind of bring it all together to make sense. But here's the gist of it. Paycheck protection would provide 8 weeks of cash flow assistance through 100% federally guaranteed loans. It's interesting. I'm going to pause there because they're calling them groans, half grant, half loan. And if you use it right, you can use it to maintain payroll. And a portion of the loan can be used to cover interest on the mortgage obligations, rents, utilities, and it would be forgiven. And so that's where it's going to get real interesting, is that we are able to get loans that, again, it's not a loan because a loan typically has to pay back, and it's not a grant because a grant means you can do whatever you want to do with the money. It's kind of halfway in between, which is why they've coined this new phrase, groans, that allows us kind of like halfway between a grant and a loan, that if we use the money properly, then it can be forgiven. It can be forgiven, which is, man, that's amazing if you think about how fast that'll help our economy recover in this particular crisis. If I continue with Section FI, there is debt relief for 6 months. And so the SBA is required to pay all principal, interest, and fees on the existing SBA loans, including 7A, the Community Advantage Plan, the 504 loans, and even the micro loan for 6 months. And that's where some of the debt forgiveness is coming into play. Again, the maximum loan amount is about $10 million, and there's a multiple in play at this point. Now, we'll see what the House does with that multiple. There is some debate on that right now that I'm hearing from my sources in Washington. That's this point here about the multiply by 2.5. That's yet to be determined, but that's what I'm reading as I read through this this bill. In Section FI, it also communicates that we can use the loan for group health coverage, sick leave, medical leave, family leave, medical insurance premiums. We can use the loan for that. We can use it to pay salaries, commissions, and compensation. We can use it to pay our interest on our mortgage, but we can't use it to pay the principal. So that's an interesting little play there. Rent, utilities, and then it makes a statement throughout there that several of the debts that we had before this incurrence occurred back in January, February, we can actually use some of the lending to help cover and relieve some of the debts, the interest on the debts that we're obligated to pay during this time period. Now, loans, this is amazing. This, to me, Section F3 and sections J through M, which I've combined into this one slide, this particular portion of the bill is amazing to me because it does something that I've never seen before. In fact, I was speaking to several bankers, and they're just like, holy cow, how are they going to police this? So the loans may be refinanced. So if we took a loan out, we could refinance in the future, but there is no personal guarantee. I mean, it says it black and white in the bill, friends. There's not a personal guarantee, which is one of the reasons why I often don't like the SBA from a lending perspective, because they want me to like loan my dog and my goat and my cat, my children, and put a blanket lien over my whole life. That's not the case on this particular issue. There's no collateral required. Now, I have concerns about that as almost like a libertarian type of personality when it comes to politics, but that's what the bill has passed. No personal guarantee, no collateral. The SBA is actually guaranteeing it. The loans can be up to 10 years, not to exceed 4%. And if a borrower has been impacted, and there's some rules there on the impaction, that we can actually defer payments for 6 months. So there's some interesting language in this particular bill, just in the first 30, 40, 50 pages. If you get your hands a copy on of the bill, and ultimately, depending on what the House does, they may adjust some of these languages. But as of right now, as I'm reading this is what I'm seeing with my eyes. Next, we're going to deal with the stimulus checks. Now, in the past, we've had some stimulus checks in 2001, 8, and 9. We've received various stimulus checks, and this one's going to be like the grandpappy of all. The stimulus checks will provide $1,200 each. So $2,400 to Emily and I, and then $500 for a child. And I put a link in here. Again, you can check it out. If you look at the qualifying child, according to the IRS, it basically means that they're under 17 years of age. The benefit is starting to phase out once you get to certain levels here. So let me kind of click to those levels here so you know what the phase out levels are. So if you're single, at about 75,000 is when you're going to begin phasing out. If you're head of household, 112.5. If you're a married couple filing jointly, you're about 150. And then you're completely phased out at $99,000 in income and $198,000. And again, we're talking about adjusted gross income here, not taxable income, at least the way I'm reading the bill. So that covers a majority of Americans will receive a stimulus check here in the next little bit. So we go into, well, how are we going to get it? When are we going to get it? Well, hopefully the Department of Treasury is going to be sending it out as soon as possible. And they're typically going to use the arm of the IRS with the Internal Revenue Services records, which means they're going to use our tax returns from 19 if you filed them, or 18 if you haven't filed them. Now, in my case, I never typically get a refund from the IRS. And so if you typically get a refund and you have those automatically deposited in your bank, then the IRS will more than likely use that same mechanism to do a direct deposit into your bank. On the other hand, if it's a paper check, it's going to take about 2 to 3 weeks before we see those in the mailbox. I can remember back in 08, 09 that I actually got a paper check in the mailbox. So looks like the Treasury Department is going to move in this way if the bill passes and the president signs it. So the question was asked, well, Justin, what do I do when I get the money? Here's what I look at whenever we get money, subsidized money, for that we weren't expecting. So the first thing we want to do is buy necessities, toilet paper, friends. In fact, Miss Emily, she was texting me today. She said, hey, we have toilet paper. I was like, yay. So if you need toilet paper, now's the time to buy it if you get the money. But then I'm going to use it to eliminate some debt. I've got a little bit left on my tractor at a 0% interest. I'm going to pay my tractor off. I'm going to set some cash back for my future. And then if I don't need the money, you want to continue to take care of some charities. Now, interestingly enough, and I probably should have dealt with this up there in the 7A section. There are 501c3, which are charities that are eligible for some lending. However, religious organizations, it appears based on my reading, they're not eligible. So friends, if you have a religious organization that you care about and know about and love at this point, you may want to take some of the stimulus check. It's a great time to help boost up that religious organization. You can imagine that they're suffering, as so many Americans are at this point, and they have jobs and mouths to feed and kids to feed and bills to pay as well. So the stimulus check's not a bad way. If you don't need it immediately, you can donate some of that to a religious organization or 501c3. We're going to switch a little gears one more time here. And man, this thing is packed with a lot of retirement rules. And I put the sections in this particular area. There's some hardship distributions that are available. So many times, if you're under the age of 59 and a half and you try to use money out of your IRA or 401k, you're having to pay a 10% excise penalty. And that falls under section of the Internal Revenue Code, section 72T. According to this bill that was passed by Senate, it's going to waive that 10% early withdrawal on monies up to $100,000. if you qualify. So here's the qualifications. This is directly from the bill. If you're diagnosed with COVID-19, if you're diagnosed, you qualify. If you have a spouse or dependent, you qualify. The third point is really broad, and I don't know how they're going to police this, but if you experience adverse financial consequence as a result of being quarantined, furloughed, laid off, basically if something happened, that pretty much controls most of the country on that point number 3. Okay. And again, I don't know how they're going to police that. I have no idea. But if you are adversely impacted right now, you can, I'm not saying you should, I'm not saying you should, but you can take some money out of your IRA and not pay the 10% penalty. But be careful. If you pay that, if you take money out of the IRA, you are going to have to pay ordinary income tax on that, which leads us to some interesting points here. It's going to double the current retirement plan loan on a 401k or simple. So on a 401k right now, I'm sorry, shouldn't say simple. On a 401k or qualified retirement plan loan, you typically could get the greater of 50% of your account balance, or I'm sorry, the lesser of 50% of your account balance, or $50,000. They've changed the verbiage around to now we can get the lesser of $100,000 or 100% of the participant's amount. So let's say you have a 401k at work and you don't have an IRA that you can pull money from. Well, now you can go in and borrow a loan from your 401k for the full amount and take the entire amount out of your 401k. Again, I'm not saying you should do that. In fact, we're going to talk about why you shouldn't. But if you decide to take money out of your IRA or out of your 401k, the rule now is allowing us to actually pay the taxes on that loan or on the distribution. We can delay the repayment of it for up to 1 year before. So if we take money out of the 401k plan, we don't have to instantly go in and make payments on the interest. Another thing we can do, which is interesting, is several of our clients have used 401k monies to borrow on a house, to put money down a house. And you can actually delay payments up until a year from the signing of the bill. So that's interesting. So you can delay the repayment on your 401k loan. Now, what happens is we have roughly 3 years to pay the taxes on those particular distributions out of our 401k. That's the way I'm reading it right now. Again, that may change. Another section here, the planned amendments, deals with us small business owners who happen to have 401ks in place. If your current plan does not allow for a hardship distribution for your employees, then you can amend the plan as late as the end of the year, pretty much, and allow your employees to instantly participate in this loan program. So you can do that in your 401k plan. Whenever we get to another interesting point is the bill allows the individuals who are over the age of 72 now, who are taking required minimum distributions. So when you reach age 72, based underneath the law that transpired in December, underneath the Secure Act, when you reach age 72 now, you are required to take money out of your qualified accounts, your IRAs, your 401ks, and the such. Now, underneath this current piece of legislation, we're not required. We're actually going to waive that requirement. The reason for it, and ultimately the reason why I want to caution you on reaching into your retirement accounts to pull money out, is because the market is down right now. Now, it's recovering some with the news that we've had over the last couple of days, but depending on which asset class you want to look at, I mean, we could be down 30 to 60%, depending on which asset class or what category you're looking at on the market phase. So it doesn't make sense to me for us to take money out of our IRAs, take money out of our 401ks, and pay taxes on it whenever we're already down 20, 30, 40, 50%, depending on what you were invested in. It just doesn't make sense to me logically to do that. So I'm going to caution you that this probably should be the very last portion of money that we Americans dip into, but some people have to. I get it. Some people are going to have to use their retirement monies to get through this time. And if that's you, this bill is loosening up some of the provisions that we have at this particular point. Another one that's interesting is, as we're still dealing with retirement plans, is that single employer defined plans are getting some relief. We now have until the January 1st of 2021 to make the contributions that were due this year. So let's think about it logically. If you have a SEP IRA and you don't have the funds to contribute to your SEP IRA as you would have done part of your tax planning, you now have the remaining part of the year. You now can push that contribution past October 15th, which is normal the contribution date, all the way now to December 31st. If you have a solo 401k, again, you can push that contribution date according to this bill out to January 1st of 2021. So they're giving us an additional 90 days past the norm to help make these contributions for us at this point. Let's change gears one more time. Now we're in third gear here. This is an amazing one to me. Our fourth gear. This is the payroll portion of it. The stimulus bill is going to give us tax credits, which allow us to defer our payroll taxes. Now, I'm going to tell you, this is where you're going to have to talk to your tax advisor. I was actually speaking with mine, and I'm like, man, I'm not sure I would do this, but it allows it. And what they're looking for here is larger companies who have significant amount of payroll taxes. So we have the 6.5 or 7.2% match on the payroll tax is allowed. We're now able to delay that for 2 years. So that could be large. That allows us to delay the payroll taxes for 2 years, with half of being paid by December 31st of 2021 and the other half being paid by December 31st of 2022. I thought that was interesting. Another little nugget I dug out of the bill is there's actually a grant. So this is pretty much bailout money, a grant for up to $10,000 to cover operating cost. There's $10 billion here. Basically, it's, hey, you business owners, thanks for hanging in here. Thanks for keeping our country employed. Thanks for taking the risk. Here's 10 grand, cover some operating cost. Thought that was an interesting section. Let's switch gears again. Let's go to tax moves that we can look for now. Now, it's been questioned, and it was confirmed this last week by the Internal Revenue Service that there is an extension on the tax filing date till July 15th. And you can also make contribution. It says IRA, it should say HSA there. Autocorrect got me again. For your IRAs, your HSAs have also been extended. So I'm going to tell you. So think about this logically. Let's say you're in a business that last year you had a stellar year, as so many of us did. Really good profits. You had some higher taxation. All of a sudden, this kicks in this year. Now we end up with a loss, an operating loss this year. Tuck this feather in your hat here, because you may, at the end of the year, want to go back and amend your tax returns and thus get a better refund with this new little adjustment here on the NOL. Apologize there. I've been talking all morning. Again, talk to your tax advisor on that particular issue. There's a tax advisor going to have a lot of things to deal with as they unpack this final bill when the president signs it. Interestingly enough, that's why your tax advisor may say, hey, hold on, we may not want to file your corporate tax returns for 19 yet. And that's because interest expenses has been adjusted from 30% to 50% of your taxable income for 2019 and 20. That's what I'm reading in the bill at this point. Again, this is not tax advice. Talk to your tax advisor. I just thought that was interesting there. I'm looking at it more from a financial planning move for all of our business clients on how we can, again, adjust it. My job is to try to help our clients double their net worth every 3 to 5 years. That's my personal goal for our clients. Can it always happen? No, it can always happen, but we try really hard to help our clients do that. So these are some nuggets that I'm tucking away in my head as we do comprehensive planning, business growth strategies, et cetera, for the clients who we are honored to serve. Let's switch gears to student loans. And this is, I think, near the end here. The student loans are getting some adjustments. Now we know at this point we can put pause on our federal student loans, and there's no interest payments through September 30th. So that's new. There's no interest payment. Where it gets interesting here is the third point. We can count these next 6 months of no federal student loan for the purposes of the forgiveness program. Okay. I haven't dug too deep into what that means and how they're going to unpack that. It could get interesting here in that particular point. I don't know what the intent of that particular thing was, but it appears there may be some forgiveness available for student loans at this point. And then something interesting is the employers can help you pay up to $5,250 of your student loans tax-free. So as a perk that they're trying to do here is several employers will hire on college graduates, and they'll say, hey, we will take on your payment of your student loan I know that's often the case in some of our hospitals, often the case in some of our bigger companies. In this particular issue, you're going to be able to make those payments in a tax-free environment. So, friends, there's a lot of information here. I'm just skimming the surface of it today. I wanted to reach out and give you some nuggets here. Let me tell you that for more information, I want you to stay tuned to the Financially Simple podcast. Go on Stitcher, Spotify, iTunes. Go to Financially Simple. We've got guests coming on regularly. We're trying to get a couple of our politicians who verbally said they would come on to explain in detail what the thinking was behind these points. We have SBA directors that have already been interviewed that are coming on, that are going to be published here. We have several of our ongoing consultants that we work alongside with who are adding value. They're interpreting things, and we're dropping out as much information. In fact, my goal right now is to interview professionals, to interview business owners, to try to help us all get through this time period in a positive environment, number one, but survival mode. You know, I've said it consistently over the last little bit that I firmly believe that the entrepreneur is the solution. I firmly believe that within every fiber of my being. And I want to do my best to not only equip the clients who I'm honored beyond belief to serve the clients who've entrusted their lives and their businesses and their families into the team here at Heritage Investors and Heritage Business Advisors. I love that fact. But I also want to help those of you who said, man, I don't have a coach who understands this stuff. I don't have a person who can help me coordinate. I don't have anybody who's trying to help me double my net worth every 3 to 5 years. Maybe you find yourself in that. Maybe you find yourself as a business owner calling your buddies up in a whole different environment, maybe a whole different microeconomic environment, maybe a whole different financial environment at this point. If you find yourself talking to your friends and your colleagues versus professionals who deal with this day in, day out, then now's the time for you to talk to a coach. Hey, look, we're here to help you. Again, I will bet on the American business entrepreneur every day of the week, every single day, because we have what it takes to charge hell with a water pistol. That's who we are. Our politicians have given us some pretty interesting things here for us to chew on. We're going to be unpacking this thing even more over the next few weeks with our guest. We were even trying to work on creating a program that we can package up the SBA loans. We brought in one of my long-term friends and consultants to help me and our team put together packaging so our clients and business owners can say, hey, Heritage Business Advisors, we need help. We don't know which loans to go with. We're putting together a program right now within the company to be a part of the solution. So our business owners that we had the honor to serve and the business owners who are looking for a long-term relationship to have with a consulting firm that can help them double their net worth every 3 to 5 years. It's possible. If that's you, hey, check us out on Financially Simple. There's a lot of information there. Check us out on Heritage Investors. That's our investment advisory firm. Let me go out and say this. I have not given any investment advice today. That's not the goal. It's not investment advice. This is not giving legal or tax advice. This is my view on what I've read through this 800 plus page bill with a highlighter in my hand, going page by page and copying and pasting and trying to streamline it down. Could I have misspoke? Yes, it's very possible. It's very possible. This stuff is flying at us nonstop. And I'm working like 18, 19-hour days right now trying to help our clients survive this. And let me tell you, there's a message of hope that we all have. The sun arose today and it'll rise tomorrow. My challenge to you is you've got to make this, you've got to make it your best day ever. You can. This point in time will define us as business owners. We're going to look back in this point in time, 5, 6, 7 years from now. And as we survive this, this craziness that we find ourselves in, you will forever reflect back on this point, and nothing that you will face from this point may seem of the magnitude of what we're dealing with. I go in my own life back in 2008, 9, 10, 11, I went through an amazing trial, which is why I'm so optimistic at this point. This is not going to end us. This is going to strengthen us. Remember, in order to grow a muscle, you have to tear it a little bit. And a lot of us are being pulled every which way. My message to you is that of hope. My message to you is that grab a team. If you don't have a team, reach out to us. Again, this is educational purposes only. Y'all go out and make it a great day.